If internal and external structure still feels confusing, this video will explain real chart examples from simple to complex and apply everything you learned about internal versus external structure. This is a direct continuation of the previous lesson. If you watch both together, your confusion about structure will be gone completely. So let's begin with the first example. In this example, the market is shifting from bearish to bullish. First, we are inside a bearish wave, where price is making lower lows. Here you can see a valid retracement, so we mark this as a lower high. Then price drops again, creating a lower low. Now look here. Do we have a valid retracement? We can see a small candle body closing above the red candle, even though most of it is wick. Technically, it still qualifies as a retracement. So this becomes another lower high, and this is another lower low. Price breaks that lower low again and continues downward. So once more, we mark a new lower low and a lower high. Now let's draw horizontal lines at this confirmed lower high and this lower low. Important point to remember, everything we have marked so far is external structure. And remember, a lower high is only confirmed when price breaks the previous lower low with the candle body close, not just a liquidity sweep. Here, price makes a new lower low. So, now this lower high is confirmed. Everything happening between these two horizontal lines is internal structure. After this lowest point, price starts to move up. From an external structure perspective, a real trend change will only happen when price breaks this last confirmed lower high. Until then, everything is still internal movement. Now let's mark the internal bullish structure in this area. Here, price makes a valid retracement. The sell candles close below the green candles, so we mark this as a higher low, and this as a higher high. But to our surprise, price did not break this last lower high. Instead, it broke the last confirmed lower low. Now, from an external structure point of view, this point will now become our last confirmed lower high. So, we adjust and shift our horizontal line to this new structure point. Now again, everything happening between these two lines is internal structure. Finally, price breaks this line, the last external lower high from the bearish wave. This is where the external momentum shift happens and the market officially changes to bullish. Now let's move to example 2. First, we mark the external structure of the bearish wave. Here, you see the last lowest point, so this is our low. After that, price makes a valid retracement, so this becomes a temporary lower high. But notice something important. After this lower high, price never broke this low. So this lower high is not confirmed, and we cannot mark it as an external confirmed lower high. As you know, for market reversal and momentum shift, we must look for the last confirmed external lower high. So in this whole bearish wave, this is the only latest confirmed lower high. Now let's draw a horizontal line on this confirmed lower high. And this low, everything happening between these two lines is internal structure. From an external structure point of view, a real momentum shift or chain of character will only happen when price breaks this upper horizontal line. Now, if we mark the internal structure, you can see price making higher highs and higher lows, which means internally the market started reversing towards bullish side. And then, finally, internal structure is converted to external structure. Now let's look at example 3. Here, this is the lower low, and this one is the confirmed lower high, because this lower low was broken with a candle body close. After that, here we see the market starts reversing, and only when price breaks this last confirmed lower high with a proper candle body close, that's when external momentum shifts to the bullish side. Everything happening between these two horizontal lines is just internal structure. Thanks for watching. See you in the next one.